Hello and welcome back to Building Wealth on the Go. I'm your host, Brad Wilson, Wealth Advisor with KLT Wealth Management and Associate Portfolio Manager at Q Wealth Partners. Today, we're diving into our November 2025 podcast here, and we're diving into an economic update and overview with a little bit of forecast to the end of 2025. If you haven't yet checked out, last month, we dropped our Q3 market update, looking over world markets, Canadian markets, US markets in specific. So it was a great little deep dive, or short deep dive into those. And today we're going to now move into starting with global economic update. So quick little snapshot, global economic update. Overall, we are seeing contraction amongst the global economy. We break it down into sort of the advanced economies and emerging and developing economies. And what you are seeing is those advanced economies, those being sort of the US, some of major Europe, Germany, France, Italy, Spain, the UK, Canada. We do see more significant slowing of growth. And the projections that's going to continue to slow and be at low growth levels. You are seeing some emerging market developing economies as well, though, advancing throughout this period and finding some growth and prosperity in these times that are definitely challenging, especially here in North America. You'll see on screen, we've got sort of economic outlook growth projections from the IMF there with their sort of economic outlook from October. And you can see the consensus and sort of the average growth in GDP, real GDP annual percent change from emerging developing economies is 4.2% relative to 1.6% in the advanced economies. So really a big disparity there. And we're going to continue to see that as the forecast moving forward. Let's dive now specifically into the US, take a look at what's happening there with a quick little overview. What we saw throughout the end of the summer there was slowing in the labor market. Job growth was much lower than anticipated. There were some revised numbers from earlier in the year. So you are starting to see a lot of weakness there. We saw the Fed cut rates in the US, and likelihood is there's going to be another rate cut in December in the US, with a forecast of around maybe 2 to 3 rate cuts in 2026. I think what we're looking at is a US dollar that is weakening. I think that is a talked about or publicized goal of the administration in the US right now, is to weaken the dollar so that they are maybe a bit more competitive on the international scale when it comes to trade. There is lots going on. The government shutdown, as I'm recording this video right now, we should find out news on whether that ends today or not. And the tariff conversation as well. It seems that we've seen some settling negotiations and whatnot from a lot of the tariffs, and it seems to be settling in at about a 15% average tariff across the board, which is very, very high relatively to what we've had in the past. It's actually the highest sort of average tariff since the 80s. There's going to be lots of change on the trade partner front. Countries, especially like Canada, you see, are negotiating with Asia, Europe, the UK a little bit more to diversify their trading partners and looking internally as well. We're in really a time of protectionism, focusing on those domestic industries and utilizing resources and employees and companies that are domestically housed. It has been a tough year in Canada overall. We have seen much slower growth. We've seen some months even entering negative growth. Overall, Q3 came in a little bit lower than some analysts expected, in and around 0.4% growth. So it is slowing for sure. We are seeing pretty high employment, over 7% here in Canada as well. So there is some weakness. We've had the Liberal government tabled their first budget. There are measures in there, some spending measures that are hoping to stimulate the economy, bolster sort of growth in the years to come. Does likely come with some continued short-term weakness, although we should see the Canadian dollar gain some relative strength over the coming months, as well as we see weakness, especially in the US dollar. There is lots of progress with the Canadian government attempting to diversify trade and relations outside of the US amongst the tariff uncertainties, but that continues to be the primary sort of concern and reason for uncertainty is the tariffs. We are due for a USMCA free trade agreement negotiation with Mexico and the US in the coming year as well. So there's a lot on the horizon when we come to that. So it'll be interesting to see how that all pans out. I will put on screen so you can kind of break down a little bit of the monthly GDP summary talks a little bit through June, July, and August, what we've seen year over year changes from August 25 as well. So you can see definitely a little bit of slowing growth overall. September was a little bit higher as well with those numbers that came in. We'll wait sort of the October numbers to see how that goes. But recession continues to be the topic both in Canada and the US. Many say that there is possibility we do enter a recession. There is also a high likelihood we enter maybe an extended period of low and slowed growth before we rebound into a much more prosperous economy and economic situation. So lots to watch ahead, both in the US, Canada, and internationally. We'll continue to monitor and update every quarter on the overall economies. Thanks for watching and tuning in to this month's episode of Building Wealth on the Go. We'll be back next month with a topic-based episode, and then into the new year with a market update in January. Make sure to subscribe, leave a like wherever you are watching, and we will see you next time.